Good morning, everyone. Welcome to Live Trading Action by InTheMoneyStocks. Today is September 19, 2016. My name is Nick Santiago. Thank you all for tuning in today. All right, last week I did a video on a stock, Telecom, called AT&T, and the stock went lower, and I've been flooded with emails from members and people that watched the video saying, hey, well, where is Verizon going? I'm a Verizon shareholder. I'd like to know where this stock is headed, and today we'll cover Verizon. So if you take a look at VZ stock, what you're going to notice is that the stock topped out in early July and at around $57 a share, just underneath that. And you're going to see that the stock has been rolling over into the 200-day moving average on the daily chart and currently trades around $51 a share. Now, the stock had a big rise into the month of July, so it was due for some type of a correction, but the corrective move should continue. And what we mean by that is if you take a look at AT&T and then you take a look at Verizon, what you'll notice here is over the last 5 days, Verizon stock is really just consolidating here. And if you take a look at AT&T, you'll see pretty much the same type of picture. So just like AT&T, Verizon is putting in a very similar pattern, and this pattern tells us that the stock ultimately wants to go lower. So when we flip back to the Verizon chart, what you're going to see here is that the stock hovering around the 200-day moving average cannot really get much of a bounce, but one day that tells us the stock generally wants to go lower. So where is it going to go? Well, you flip over to the bigger time frame and it gives you kind of the answer. So if you take a look at the weekly chart, you're going to see a couple of things. One, you're going to have the 50-week moving average around $50.40, and then you're going to have a pivot low, and then you're going to have the 200-week moving average. I have to think, by the way this chart is behaving, this is your better level. So what I would be doing is looking for the Verizon chart to get down to that 48.75, 48.50 level, and this is where you get involved on a long side bounce play. Very easy trade because you're going to put your stop loss right below the green bar low over here, which is 46.50. So basically only risking a couple of points, and you could get a nice upside surprise all the way back to probably $53 or $54. So again, if you are looking to get into Verizon, what you want to do is wait for the stock to get down to that 48.75 level. That is going to be your opportunity to get in on the long side. And easier than that, you're just going to simply put a weekly chart close stop loss here at 46.54. Any close below there, you move out. But this should serve as excellent support for a couple of reasons. One, it's a 200-week moving average. That's pretty decent in and of itself. And here is the breakout bar. So here's where the stock broke out. High volume. That's generally where the institutions will come back in and support the name. So if you're looking to get in to Verizon on the long side, here's your play, 48.75. That should be a pretty decent bounce play. You trade it right back up into the $53, $54 range ultimately, and you risk about $2 with the stop loss. So again, if you want to trade this and other equities, come on over. Take a 7-day free trial to the Research Center. We're having a great year. We're going to look to keep that going into the end of 2016. And again, if you're part of the Research Center, you don't only get our chart setups, you get our cycle work, you get all of our content, and you also receive our No Hype Live broadcast, which we do twice a week. We allow members to come in, ask us questions about anything stock market related. We do that on Thursdays and Sunday evenings. So again, that is all part of the Research Center product, and as well as all of our stock picks. So with that being said, everybody, have a great trading session, and we will see you on the charts.